Brace yourself for a tempestuous storm brewing on the horizon as the revered sage of investing, Charlie Munger, issues a bone-chilling warning that reverberates through the very foundations of the stock market.
But they should go up. We couldn't have kept them forever at zero.
Amidst the hustle and bustle of Wall Street, a chilling prophecy echoes in the corridors of finance as Charlie Munger, the sage of wisdom, unveils a dire warning, leaving investors trembling in anticipation of an impending cataclysm.
Now, some people can't tell their best ideas from their worst, and in the act of deciding that an investment already is good, they get to thinking it's better than it is.
Prepare to witness the unveiling of a prophetic vision as Charlie Munger, the mastermind of the stock market, steps forward to reveal a foreboding truth, casting a long shadow over the future of investors far and wide.
Some deals work out better than others for 3G. And they would love to have a way of going back and turning all their bad deals into good deals. Berkshire would like to have the same option. We don't get it either. Averaged out, 3G did pretty well.
In a world that's jaws captivated by the allure of wealth, Charlie Munger emerges as a harbinger of doom, his words echoing like thunder, warning of an imminent reckoning that threatens to plunge the stock market into a tumultuous abyss.
Are going to have a harder time now that there's so many of them competing for a diminished bunch of opportunities. So my advice to value investors is to get used to making less.
As the clock ticks relentlessly towards the fateful year of 2023, or at least the ending therein, the financial realm trembles in anticipation of Charlie Munger's haunting proclamation, a harbinger of a stock market tempest that threatens to devour the unprepared.
So, why is it that people can't think clearly about investing or decisions in their lives?
Well, they don't think very well about gambling either. The standard human condition is a lot of miscognition.
Behold the somber tones of Charlie Munger's voice as he pierces the deafening silence, foretelling a storm that shall test the mettle of investors, casting doubt upon the very foundations of the stock market stability.
Recently, they've had their approach hasn't worked as well in recent years as would be ideal. Again, welcome to human life. It isn't so damned easy.
There is so much money now in the hands of so many smart people, all trying to outsmart one another and out-promote one another, getting more money out of other people. And it's a radically different world from the world we started in. And I suppose it will have its opportunities.
And there are ways to make hay of that, or...
Yes, you can take advantage of other people. You can improve your own life by eliminating your miscognitions. Well, there's no question about the fact that as interest rates have gone up, it's hostile to stock prices. But they should go up. We couldn't have kept them forever at zero. And I just think it's just one more damn thing to adapt to in investment life, is that there are headwinds and there are tailwinds, and one of the headwinds is inflation. And I think more inflation over the next 100 years is inevitable, given the nature of democratic politics in a democracy. So I think we'll have more inflation. That's one of the reasons the Daily Journal owns securities instead of government bonds, owns common stocks instead of government bonds.
I think one of the inane things that's taught in modern university education is that a vast diversification is absolutely mandatory in investing in common stocks. That is an insane idea. It's not that easy to have a vast plethora of good opportunities that are easily identified. And if you've only got 3, I'd rather be in my best ideas instead of my worst. And now, some people can't tell their best ideas from their worst, and in the act of deciding that an investment already is good, they get to thinking it's better than it is. I think we make fewer mistakes like that than other people, and that is a blessing to us. We're not so smart, but we kind of know where the edge of our smartness is. That is a very important part of practical intelligence. And a lot of people who are geniuses on IQ tests think they're a lot smarter than they are, and what they are is dangerous. But if you know the edge of your own ability pretty well, you should ignore most of the notions of our experts about what I call diversification of portfolios.
Well, of course it's a very serious issue because it's an enormous amount of power. And for a while, all these index funds got the feeling they were suddenly made godlike to clean up the world. But Vanguard has retreated from that policy, and I think wisely so. And I have some hope that Larry Fink will follow. I don't think it's smart for these index funds to try and influence the policy and politics of the country just because they're an index fund. I think they should be satisfied to eliminate some of the folly from investment management and do a better job for their clients, which I think they do very well. And I think they should be pleased with that and not try and run the whole damn country as a matter of corporate governance. I have no feeling that anybody at Vanguard or Larry Fink's operation has any special genius at how American corporations ought to be run. And to the extent they ask Berkshire to do this or that, I wish they'd stop.
Ask Berkshire to do what? To follow their guidance?
Yeah. I'm just not interested in their views as to how Berkshire should behave.
Yeah, one of the really interesting things about Ben Graham, he was a really gifted teacher, a very honorable profession. And that is what has lasted. However, an interesting fact that he was sheepish about in his old age was that more than half of all the investment return that Ben Graham made in his whole life came from one stock, one growth stock, Geico, Berkshire's subsidiary. And he at the time he operated, there were a lot of sort of lousy companies that were too cheap, and you could make a little money floating from one to another. But the big money he made was one growth stock. Buying one undervalued great company is a very good thing, as Berkshire has found out again and again and again.
Practically every business that Disney has gotten tougher than it used to be. Again, welcome to human life. Think of how Disney once owned the world. Lion King was running a long run on the theater district of New York. They went from triumph to triumph, marching. All of a sudden, on practically every front, it's more difficult. This is what happens. Imagine Kodak, which totally dominated photography in the world. And they invented this new technology. Kodak wiped out its common shareholders.
You think Disney's headed down the same path, or you think that they'll be able to pivot? I mean, I know you followed the company closely.
I think Disney has a lot of assets in it, but
yeah,
it's unpleasant to have something. How would you like running the sports ESPN now at Disney compared to its heyday? It's going to be way harder for them.
The stock's up this year.
Movies look to me like it's going to be a bloodbath too. So it's not a bit easy. And it was easy. In the heyday of ESPN, Disney made nothing but money out of ESPN. It was a total gold mine.
Well, it's so simple to spend less than you earn and invest shrewdly and avoid toxic people and toxic activities and try and keep learning all your life, et cetera, and do a lot of deferred gratification because you prefer life that way. And if you do all those things, you are almost certain to succeed. And if you don't, you're going to need a lot of luck. And you don't want to need a lot of luck. You want to go into a game where you're very likely to win without having any unusual luck.
I'd add one more thought, too. You need to know how people can manipulate other people, and then you need to resist the temptation to do it yourself.
Oh, yes. The toxic people who are trying to fool you or lie to you, who aren't reliable in meeting their commitments. The great lesson of life is get them the hell out of your life.
Yep.
And do it fast.
Well, we did it for a very simple reason. We got more strength per dollar invested. In China, the companies we invest in are stronger relative to their competition and priced lower. That's why we're in China.
This one came in from Wasim. He said, although the financials seem strong, do the political pressures from the Chinese government worry you at all?
Well, the Chinese government is worrying all the capitalists in the world way more than it used to. And of course we don't like that. And we wish that China and the United States got along better. And if you stop to think about it, think of how massively stupid both China and the United States have been to allow the existing tensions to arise. What bad is ever going to happen to China or the United States if we two are close? If we make good friends out of the Chinese and vice versa, who in the hell is ever going to bother us? Of course we should make friends with China. And of course we should learn to get along with people who have a different system of government. We like our government because we're used to it and it has advantages of personal freedom. China could never have handled its life with a government like ours. They wouldn't be in the position they're in. They had to prevent 500 million or 600 million people from being born in China. Well, it was perfectly obvious, and he'd made so much money in the other technique that it was hard for him to leave something that had worked so well. But it was not going to scale. So when he started looking for investment values in great businesses that were temporarily under pressure, it changed everything for the better. Now we could scale up to the big time.
Are Apple and Amazon technology companies, or are they brand companies?
Both.
Someone told me they asked Warren if he could buy one brand. This was about 40 years ago, what that company, what that brand would be. And he said Gillette, which makes sense. What would that company be today?
Coca-Cola.
Still?
If you take the amount of Coca-Cola drunk in the world and the main flavor, it's one hell of a brand. Now, it's such a different product from this stuff on the internet. I don't have the same. My judgment would not be as good on the internet as it is on Coca-Cola. We invested some money in China because we could get more value in terms of the strength of the enterprise and the price of the security than we could get in the United States. Other people, including Sequoia, the leading venture capital firm in the United States, have made the same decision we have. But I'm sympathetic to Gunlock. If he's nervous, he doesn't have to join us.
different folks have different opinions. I feel about Russia the way he feels about China. I don't invest in Russia, so I can't criticize Gunlock's point of view. It's just I reach a different conclusion.
Okay. This question comes in from Bill Roberts, and he says, Charlie, you and Warren have been making concentrated investments since the 1950s. Many of these investments have led to gains, but even more impressively, none of them have led to significant losses. As far as I can tell, neither one of you has lost more than a few percentage points of equity on any single investment. Daily Journal has recently bet a large amount of its capital on Alibaba and foreign traded stock. It's also taken on an additional $40 million in margin debt to make these investments. What makes you so sure that these investments won't lead to a substantial impairment of Daily Journal's equity capital, which would impact the company's ability to reinvest the resources needed to develop the company's software operating business?
Well, of course, if you invest in marketable securities, you have the risk that they'll go down and you'll lose money instead of make it. But if you hold a depreciating currency, that's losing purchasing power. On balance, we prefer the risks we have to those we're avoiding, and we don't mind a tiny little bit of margin debt.